Good morning, ladies and gentlemen. This is Clueless8, and this is the pre-market AM report for Memorial Day weekend, Friday, May 22nd. Absolutely beautiful spring day here in the New York, New Jersey area, and I wanted to wish every single member, free trial subscriber, and everyone that who follows us on our free Twitter feed, Clueless8FR, a very memorable, pleasant, enjoyable, thoughtful, and very grateful Memorial Day weekend. We should take a minute or longer to appreciate everything that we have around us, everything that we enjoy, everything that we take for granted, the fact that we can sit and actually make money out of thin air, called trading, stock markets, the fact that you're all Clueless8 members. No, I'm just kidding. But honestly speaking, these 3-day weekends are times to enjoy with our families, with our loved ones, with our dogs, our cats, and to reflect upon what we can do better. One of the key things, most critical component of trading, investing, and in life is the power to make decisions. Decisions produce outcomes. Right or wrong, you have to be in the game. I keep repeating, that's the mantra I live with in my life, and that is the fear of regret. The pain of regret is far worse than the pain of sacrifice. Fear itself, trepidation, doubt, everything's fine. Stress is good. Just use it for positive benefits. When I enter a large trade, I'm always stressed out. There's nothing wrong with it. Worry is good. It gets your adrenaline flowing, the dopamine working in your brain, natural dopamine, mind you, and you know what? It works. But the fact remains that the majority, and I repeat that even now, at this stage of the market, the majority not only have missed out on this humongous rally, bull market that we have had in between corrective pullbacks, large corrective pullbacks since 2009, are still fearful, are still going out there and just sulking around, grapes are sour type of attitude, excuse my French, pissing on the markets, the Fed, and everything that they can find their hands on, and just missing out on what's happening in front of them. It happens on a daily basis in the markets, and it happens in our within our community here in Clueless8, our growing community, I should say, and it happens everywhere. But we have to fight that negativity. I'm not saying you got to go out there and go hog wild and be uber bullish at the wrong time. But the fact remains, when these October 15th, these June type of looking at a short term, obviously May type of situation, sell-offs come, you don't need to go hide in a bunker. Markets, this is still a bull market. Bull markets don't transform into bear markets in one instance. I don't care what happens overseas. I don't care. Unless there's real Armageddon, unless there's a 9/11 type of scenario, which even was short-lived. I lived through it. I should know it. I almost died that day. So the point is that even that will cause short-term fluctuations, but the march will go on. Corrective pullbacks, mandatory. Expecting 7, 8, 9, 10% type of pullbacks, that's fine. But to sit around brooding that the Fed is juicing the world economy and every central banker is a stupid idiot and doesn't know what they're doing, and we know everything because we're like super cool, and we know that oh yeah, aggressive monetary policy doesn't really work, and all that stuff. Well, let's not do that. I am a passionate student of the market, of life, and I think I can go head to head with pretty much any big shot analyst, any big mouth trader, or talking head on TV on many different fronts, both economic and political. And as you know, my two famous terms, behavioral game theory and political game theory. Well, those are not just fancy words. Those are things that I tend to know a lot about. Variable outcomes, variable players, no linearity. That's what the stock market is. Stock market, finally, to cap this little commentary, is not about certainty. It's about probabilities. If you have a high probability, medium probability, take risk. You have to quantify your risk, do what you need to do. I don't manage your book. I manage my book my own way. Putting tight stops in a volatile market is a loser's game. We know that. But if somebody wants to do it, that's fine. But what repeatedly we have seen is that's that you don't jump back in the trade and the trade's gone. And the could have, should have done this. Hey, I've been there too, I know. Okay. I just do it far less. That's all. So, should have, could have. Oh man, I'm waiting for a pullback, beauty crowd. You know what? You guys will never make real money. Real money is about taking risk. Like that one that I put out there by Paul Tudor Jones, right? One of the most famous and most successful money managers in the universe. The inability to read a tape and spot trends is also why so many in the relative value space who rely solely on fundamentals have been annihilated in the past decade. Well, guess what? They've been annihilated in every decade. And you know what that means? Sometimes I rant off and I keep on talking about PE multiples. Guys, shove that PE multiple in a closet and just leave it there. I worked on Wall Street for many, many years. This PE multiple crap doesn't work. You can. I'm not saying that something's not overvalued, but you have to measure it versus what the background is of the market. You have to measure it versus what the growth rate is, what their competition is, where they're expanding, what they're doing. So just by looking at this frigging PE stuff that I keep on hearing about, even in the room sometimes, is hogwash. I'm not saying everyone doesn't have a right to look at P. Oh, this is P. That's the old-fashioned legacy way of looking at things. My approach, as people who have followed me, people who have benefited from me know very well, is to work in the new paradigm, to constantly adapt within a set of rules, to have some sort of discipline. My discipline is change. Change with the times, move along with it, adapt to volatility, adapt to algo, high frequency trading type of situations. Try to understand what the reality is outside the fishbowl, which we call the USA. Try to look at the USA from the outside in, or not from the inside out. Take a trip. Take 3 months off. Take your family. Go overseas. See what's going on out there. Guess what? Despite all the negativity and everything that we hear on the news channels and everyone dying and these idiots in the Middle East, ISIS and all that crap, guess what? The world is still growing. People still want a decent living. They still want that one car, a working fridge, running water, power, electricity, the kids to go to school. We have it all here. So let's make the best out of it. All right. Thank you for listening. Um, let's take a look at the spiders and just look at the chart. All right. Every single member who has taken the advanced coaching, or people who've listened to the video cast, to be honest with you, and I do recommend that everyone take the advanced coaching stuff. I'm not here to make a meager $30 and spend 2 hours on group sessions, an hour and a half. That's what I do. I'm just trying to help people. So if people don't want to sign up, I'll tell you, it's to their detriment. That's all I got to say. So looking at this here, I'm not going back to October 15. I'm looking at it from a standpoint of what happened in May. This is a rising wedge. We're getting to. I'm actually going to go back a little bit and look at where we came from, and that would be here. rising wedges, ascending triangles, everything that I talked about for months and months have come to fruition. And guess what? The market will correct and will go higher. So just start doing what's right. So let's draw this out here for people. I'm just going to show the broader picture here, okay? And I want people to review every single chart that I put out there. I'll put out a fantastic long-winded report on, oh, my good old silver light froze. Great. Long-winded report in over the weekend. People can review that. Reminder, we have a Saturday 9 a.m. group session, and we have Siam Shogun's technical platform set up and all that stuff on Sunday, I believe 7 p.m. Is that right? Well, you have to check with that. I do apologize if I'm missing the times. So here we have the rising wedge. If you really want to know what the extreme is, extreme would be up here, just the way we got up here. Then you have a corrective pullback, which technically speaking should hold at this level, possibly make another move up and fall. Band is getting narrower and narrower. That's generally what happens on, as the market makes new highs. So what we have here is either that, or we have or we just move here, we fall hard. Remember the 3450 lines, the Bollingers, then you have this green line that you see here, that's acceleration band. All the legends are here. And then you have these type of supports. It's really as simple as that. Now, what's difficult is to trade within this framework. That's where the difficulty comes in, okay? So nothing new here to show. We have a little bit more room to move, or we just cap it here. This was the breakout, the ascending triangle breakout. It kept on showing for months, okay? Is there a possibility? Let's look at the bear market possibility. Is there a possibility that we drop really hard to 1980, around that, on the S&P 500? Absolutely. Big 1,000-point type of drop. So and I welcome it. Take the froth out of certain parts of the market. Keep in mind that the market is not fully overvalued. Markets are fully overvalued because number one, the sentiment, which is far from it. Number two, that every sector is above the 50-day moving average. They're not. There are many sectors and many stocks, I should say, many stocks which are far below their 50-day moving average, or close to it, or far below their all-time highs. To me, those are the ones that I want to look at. If there's money to be made in those, fine. I'm not really in the business of keeping on chasing Netflix all the way up. I like Priceline. I like Google. I think these stocks will hit back towards their old highs. If you want to look at big cap movers, chasing new highs is fine, because that's momentum. That's momentum investing. And if the company's doing the great things, they will move higher. And Netflix will probably go to $700. What's the big deal? I called it when it was 400. It was going to go to 600. It did. We traded in between, made a lot of money. Alibaba called it at 80s. It's going to 100. Things happen. You just got to stick with the trade, do what's right. So so far that's where we are. Nothing new to show. So the first level of support comes in around 2040, then 1980, and then of course we have the October 15th low, which is around 1800s. Can all this happen? It sure can happen. June, I believe, is going to be the month that will really take a nice hit. Probably not right away, because everybody's expecting June starts and we just crash. No, it's probably going to happen in the middle of the month. But stay tuned, stay clueless, have a great Memorial Day weekend, engage with everyone like I normally do, and get involved, take the sessions, learn more, and profit. Thank you for listening.